And you're coming to Denver, is that correct, Gary?
I will.
Okay, well, we'll have to grab some coffee or lunch or something while you're in town.
And we're live.
Are we live, Ben?
Yes, we are live.
All right. Well, good morning, everyone, and welcome to Where's the Funding, hosted by the Fiber Broadband Association and sponsored by Broadband.money. I'm Gary Bolton, the president and CEO of the Fiber Broadband Association, and this is our 7th episode of 2023. This is a 12-part series designed to help you understand, navigate, and obtain matching funds for broadband grants. The NTI BEAD program requires broadband grant applicants to come to the table with a minimum of a 25% matching funds and a letter of credit up front with the application. For many smaller and non-traditional providers and communities, this may sound daunting, but it doesn't have to be. This 12-part series is help you understand how and why meeting these requirements can be straightforward. Last month, we had a great session where we discussed how to leverage the Capital Projects Fund to match resources from private sources for BEAD grant applications with Chris Pritz of the Municipal Capital Markets Group. If you missed it, you can go to the FBA website under events or go to broadband.money.io and watch the replay. Today on Where's the Funding, we are back with Chris Pritz, and we're going to be focusing on tapping municipal markets. So Chris is the managing director of Municipal Capital Markets Group. Chris works with a wide range of investor clients on capital market securitizations, private placements, and other funding sources. He funds profiles from high-rated to non-rated. He has a deep knowledge of the evolving financial regulatory landscape and also benefited from the federal lending programs, including U.S. Department of Ag's Rural Utility Service and with nonprofits. He holds a bachelor's degree from the University of Colorado at Boulder, one of the nicest places on the planet. So welcome, Chris. And for audience, please type in put your questions in the chat as we go, and we'll work that into discussion. So kind of to kick things off, Chris, can you, kind of before we get into municipal markets, let's start on a quick recap on you and the Municipal Markets Capital Group and your firm's focus.
So MCM, as you call it, Municipal Capital Markets Group, the abridged acronym is MCM. We've been around since 1989. We are a broker-dealer underwriter of securities. We also do quite a bit in the private placement world, so we kind of straddle between the bank work and the general bond market. I came from the tech industry and worked on fiber networks, wireless networks. Actually, my first job out of college in Boulder was working for a wireless company, which is still doing its same thing, competing against Apple, called Spectralink. Was a public company, not anymore, but they are. That was my entry point into the wireless industry, and worked on a few other industry firsts. That was one of the first pre-Wi-Fi out of 211 wireless LAN networks that was integrated with voice, and we were doing data back then. And then later in a career, I worked with EchoStar and helped develop the broadband group with IPTV infrastructure and MDU fiber networks. And that was the early stages of over-the-top content. And we kind of I saw the infrastructure need back then. Still struggling to figure out how the market is. How are we going to get that infrastructure in place? And so I went to go work in finance, because obviously all of that is pivoted off of the capability of raising capital for the infrastructure. So had started with this group to help come up with a plan on how to build broadband. There was a few folks, bankers here in our group, that had some experience in it. And at the time, there was just these guys and then some guys at Oppenheimer who started on the original Utopia and a few of the networks out there, Crawfordsville, Burlington, some of the struggling networks back 20 plus years ago. But we're uniquely positioned to have a background in the space, can do some really interesting things around raising capital for P3s. We also have a group that does a lot of utility work. We lead the market in prepaid natural gas. So we have a utility background here, which I think is second to none out there. We've been top 10, top 5 in MA, municipal advisory work for utilities. over the last few years, and that's negotiated underwritings. So in the numbers of tens of billions of transaction size, we do advisory work. So we can wear either hat. We can underwrite. We can be an advisor. It just depends on our role and our fiduciary responsibility to the project. So that's a snapshot.
All right. So, and you also were at the state, right, with an OIT, and so
correct.
When you came from OIT and then moved into investment banking, you developed a view or philosophy about why municipalities need to participate in this market. Can you talk a little bit about that?
Communities have always participated, right? I mean, even in the state of Colorado, we built a network called the MNT, which was a fiber network supposedly to connect all the county seats in the state in partnership with Quest. And if anyone's an engineer out there, they had built an ATM network, which was obsolete the minute they built it. And it was built that way because of the RBOC legacy infrastructure that already existed. And that was kind of my pivot point. When I read it in the Denver Post, I go, what the heck is the state doing? But they had put a bunch of money of capital into the project from the general fund, and Quest put in some too. Now Quest owns that infrastructure, and they have yet to connect a lot of the rural communities in Colorado. This was 20 plus years ago. So yeah, my view is that I think, the role between municipalities and governments and infrastructure like this type of infrastructure, especially in the early stages of it, is important, because at the end of the day, it will evolve into a form of a utility or a regulated industry, right? It might not be, I thought IPTV 20 years ago was going to be the way to go. Snapshot now, people are still trying to figure out how to cut the cord, right? So it's taken, I thought 20 years ago, you'd sell Comcast short, right? And clearly not, because the stock is still soaring, but nonetheless, the content is over the top. So the operating margins on the content are becoming less and less for distributors of it. And I think the notion is having this migrate into a full utility format or a regulated format is going to take a lot longer, right? It's going to take decades, probably, maybe not even my lifetime we'll see it. But we are seeing a lot of municipalities bootstrap their way of getting infrastructure built. Understanding that that's the long view, right? And infrastructure-wise, the cost of capital for municipalities and utilities is a lot cheaper than it is for private. You don't have the race to the bottom, as I call it, where your operating margins need to be really high to pay your investors. In this scenario with nonprofits and municipalities, you can, your whole goal is to operate at a pretty close to zero-sum game on your profitability, because you're a nonprofit, right? So, you can put money back into the infrastructure. You can use it for subsidizing cost of service, all of it, right? So you're not kind of limited on building infrastructure based on your profitability model. Although when we first build these, there has to be that profitability because we need that in order to build the infrastructure. So, but nonetheless, yeah, I do believe that ideologically you have to ask yourself two questions. One, do you believe that the internet will further evolve, right, and require more speed using Nielsen laws or Moore's laws? Or two, do you believe that the physical infrastructure, such as fiber, will be essential? And will it be considered in the future utility service? So if your answers to those two questions are yes, and if you've got some futuristic bone in your body, you'll understand that eventually infrastructure is going to need to be robust for speed, duplex speed for the application layer services that we're seeing. We haven't even seen some of the technology that's emerging that requires much more speed than what we have available in our networks now. Then that if those two answers are yes, then yes, you're migrating down the path of looking at this as some form of a P3 or utility network. And so that's what we're here to talk about today, right? Different structures that you can work with, that municipalities can work with your ISPs to get the infrastructure built. But the key to that boils back to who's going to control those assets, right? My view is if the city, the town, the state, the federal government are providing capital for something, you should have some ownership in that. Otherwise, you're just providing a grant, right? And nonprofits are good recipients of grants, right? They're structured that way. So donations and grant products are usually going to flow towards municipalities much easier than it will to a for-profit for obvious reasons, right? So the notion here is, what are our options as far as structuring a P3 and motivating an ISP to go into your market, right? I think that's the purpose. And what kind of financial structures can you use to facilitate that?
Well, certainly, all our studies show that when you get fiber to community, it has a huge positive impact on economic development. No one's going to move to your community if you don't have a fiber infrastructure so they can do work from home or online schooling or be able to have access to world-class healthcare. So I can imagine that every community, every mayor is, it's imperative that you have to have a robust fiber infrastructure and be able to be sustainable from now and for generations to come. So you talked about, a municipality working with incumbent. How do you incent them with a P3 structure?
Well, let me just explain. One of the problems we have in this field is that there isn't an expertise on operating a network, right? Cities don't have on staff CCIE, Cisco network engineers that you're paying $200,000-$300,000 a year for to network to monitor and configure and design a network, right? So the complexity on the back end of operating a network is really daunting. If you don't, you might have an IT guy that is fully educated, fully knows the industry, but operating an ISP, deploying, dealing with the right of way, the make ready, all the various nuances of building a network is a heavy lift. So hence there's all these consultants out there that are sort of providing these services, different variation of services that can help in building the network on behalf of the muni. And that's where the ISP can come in, right? They can come in and help say, we're going to turnkey this thing. We're going to charge $30 a sub to provide services per month. And you guys got to figure out how you're going to finance it and so forth. So that's one structure, right? I think in the future, we'll see that, just like back in the early 1900s, water systems were really complex. How are you going to purify water? How are you going to deal with the maintenance, right? And there's a good book. It's called The Ditch in Time. Patricia Limerick wrote it back in 2012. And it talks about the Denver water systems here, which were all privatized back then, early turn of the century. And what happened is Denver Water came in and bought all of these private entities, and they did it. But back then, the technology was still pretty new. People are still learning how to manage water systems. Same thing here, right? We're learning how to manage the operations of a network. In the future, there will be AI, there will be machine learning technologies, which will allow this whole process of monitoring and regulating and provisioning a network, which will be automatic. You won't have to have, it'll be a piece of software doing it. You won't have to have 4 people managing the call center, managing NOC management and all of it. It'll just be one thing. And so when that day comes, then you won't need to have an ISP to do that work. But until we do, you need someone to help facilitate that has an expertise to do that. And you're going to have to pay through the nose for it. So part of the problem is, how do you bring in an ISP to work with you where you still own the asset as a muni, and you have an operator who's coming in at a reasonable click to do this at a reasonable cost and can do it, have an expertise to do it. And so that's a challenge, because it all boils down to the economics of what makes sense financially to do something. Setting grant aside, even when you have grants, massive grants, other than Chattanooga and some big grants out there that have been allocated, you still need to have some cash flow, right? So grant will help you get there, but you have to have an operator that can be efficient, that's vested from a fiduciary responsibility towards the municipality. So the ISP is a really important piece if you don't have that internal expertise. Still waiting for an industry here where someone comes in and is willing to work as a nonprofit on behalf of a nonprofit. Mm-hmm. Right? There isn't a lot of operators out there that are willing to go and do this with co-ops or with, they're all a for-profit. Because, that's what we know. But at the end of the day, until we have a nonprofit who's willing to work on the cheap to operate these networks for the municipalities, you have to deal with the economics first. And that should be the first thing you look at, right? You should try to figure out who's your ISP, what kind of market you have. There's a lot of competition to deal with. But in the end, you still have to go back to those questions. Is fiber going to be the answer? Or are you looking at other alternative technical obsolescence and technologies like wireless or whatever? And I'm not saying wireless is obsolete, but as we all know, 5G is sort of a pipe dream for a lot of people because it doesn't really going to give you the speeds that you need in your home. It doesn't attenuate. The wireless frequency won't attenuate. So if you're leaning on 5G to solve your problems as a city, it won't be there. In the long run, you need physical plant in order to build what you're going to need to build.
Well, I mean, 5G requires a fiber infrastructure, so
that's right.
Really just the endpoints, right, of getting to be within 300 to 500 meters of your endpoint. But
yeah, go ahead.
But I mean, I think so you mentioned the municipality might want to partner with the ISP because operating in that. I mean, if you have, there's nothing better than someone with decades of track record and experience on being able to manage and networks and so forth. So an ISP partnership might make sense for a lot of municipalities. If I look at, we just talked about this earlier, Chris, my community, Huntsville, the utility owns the fiber and they lease it to Google, and Google Fiber provides the service. And we saw that similar model is up in your area with Colorado Springs. Again, the utility owns fiber, and Google Fiber or Ting or others. But we do have some comments here about with the lower cost of public finance of advanced telecommunications infrastructure makes a compelling logical argument for using it to support universal access as a public utility model. Hasn't this been widely recognized over the past 20 years? So open access, what is your thought on open access, and how is that a factor you guys look at as to whether, like, say, you bring in an ISP that's going to provide service, or you own the asset and open up to all comers where you can have multiple ISPs?
Well, yeah, I think in the future, yes, I think an open access model will work, but that's after the infrastructure is built, right? You got to think of it as a nonprofit. It is a nonprofit, and granted, you're not there to pay your shareholders, but you do have to look at it as a business model, as a financial, solvent entity. And if it's open access, the question is, what kind of guarantees are you going to get for the debt service, get in revenues to pay for that debt service, for the debt that you have to take on to build the infrastructure. And I do believe open access would be great. I think that's when we see more application layer 8 OSI models, sort of layer 8 applications starting to develop to generate more diversity in application, which would necessitate an open access network. But I think having multiple ISPs is great. You just need to have that financial model, right? As an owner of the infrastructure, if I own the road and I'm allowing access to every distributor rolling their trucks on it, I have to know that those trucks are going to be there. There's going to be some reimbursement back to me to pay for that road that I built. And so same thing. It doesn't matter to me whether it's open access or not. But I think generally speaking, when you're building a network for the first time and it's new, having an ISP that's willing to execute and provide those revenues is what's key. And it's hard to have multiple unless you have some sort of guarantee that you're going to get the penetration you need to make the model work from a financial perspective on the reimbursement, on the revenues.
So let's go to so you're a municipality and you're ready to go, right? And you're ready to kind of, so you have a design, build, own, operate model that you guys, one of the models that you guys finance. Can you talk a little bit about that? What's the financial structure look like on that, and how does that work?
Well, design, build, finance is sort of a mechanism for building projects, and it doesn't have to be communication networks. It's a vehicle we use when we're doing federal contracts or other types of large projects, right? We'll work with the design team, the engineering team, and operating team, and the finance team will all be working together. Right now, what we typically see in the muni space is that they'll send out RFPs. They'll find an RFP for design. I mean, even one here in Centennial. Well, we want to do an RFP for design. Well, the consultants that are advising the cities don't know finance. So they wouldn't know whether someone was laying something out that makes sense or not, because first of all, most of them aren't registered to be a financial advisor to the city. Right. Number two, you have to have someone that understands the nuances of the business, right? What the technology, and you could be a design guy going in and advising on a structure, but at the end of the day, you have to have a full suite of knowledge of how to build something. And so bringing in a team is one thing we do when we're dealing with complex projects, right? Where we come in and we'll bid to a GSA contract to a project, a federal project, and it'll be a design build finance team. And so the financial analysis is going in lockstep with the design piece, which is also going in lockstep with the operations team. And so you know generally what this looks like instead of piecemealing the RFP, which we often see in the muni space, which can be problematic, right? Because the hand isn't talking to the foot, and they might not have a partnership, and then the finance people might not be thinking about what the design team's doing, and vice versa. So having that as a package is usually an easier solution, just in my view. But there's a lot of ways you can go about this.
So can you take us through the steps and bring in a municipal deal to market, kind of from conception to someone actually buying the bonds?
Well, the first step is what we look at is, who are the players involved in their expertise, right? Because investors want to know that you've got a team that knows what they're doing. So expertise is important. As far as the deployment, I think just looking back on the mistakes that were made in this industry, going back 20 plus years, Utopia, Burlington. I just had a long conversation with one of the rating agencies last night, one of the head guys, because the industry has not done a rated revenue bond yet. We're working on one right now. And his question to me last night was, well, you need to prove to us that there's enough of an industry here where we can look at this from a utility landscape versus a telecom ratings in that landscape. Different types of ways of looking at a project, right? Liquidity versus, utility, debt service coverage ratios, what do your revenues look like, expenses look like, and is this cash flow? And so, one of the things is when you look at a project, we go from optically, this is what we're focusing on. This is what the economics need to look like for it to cash flow. It makes sense. One of the problems we've had in the past is that the industry has had is that they issue too much debt too fast. And I mentioned this in the last discussion, but that is the kiss of death, right? And munis are not good at doing things incrementally. They just like to go full speed. They'll jump in with all feet and arms and legs, and the whole body will jump in. So they're not thinking in terms of the risks, because frankly, the risks to a muni using taxes are minimal, right? You can always lean on the taxes. Fort Collins used, utility revenues to justify the infrastructure. They went out and built $140 million. They went out and sold $140 million bonds. The analysts that were involved in buying those didn't care about the project. In fact, it didn't even mention in the official statement when they sold those bonds what the business model for the broadband was. It was all on the electric utility. So, but my point is, if you do this in one big chunk, that's a problem, right? When every time I've seen in the industry, when you want to build a $100 million project and you go out and raise $100 million, they fail in one form or another. So one thing we do is we chunk it into pieces. Someone comes in and says, we want to build a $200 million project. I say, okay, well, what's the minimal amount that makes sense? So you can get your operations running, and we know that you have a process involved that works, and it might be 10 million. And then you can jump up the numbers after that. But one things that I do, which I think is realistic, is you do this in pieces. You're not gonna build this thing in a year. It's going to take time to build it. You have to get your partners in place. You got to figure out your operations and how you're going to efficiently build it and match your debt service to that construction timeline and when you're going to pick up revenues. And so it just, baby steps is a good way to go in building infrastructure. It took us 80 years to build the infrastructure we have now. So, it's not going to happen overnight.
So you would have success milestones. And do you, like when starting a new business, like with venture capital, right? You start with some seed funding and then you work into your Series A and Series B and so forth with your certain milestones you want to meet. And a lot of that too is because you're building valuation along the way. And obviously, so is that kind of the mindset then for when you're looking at this?
That's the mindset, but it's more about for us versus VC. VC, you could have some really solid IP, and you could have just a couple basic milestones to hit. And this is a long view perspective on build out. So we want to walk slowly before you start building. So one thing that we do is most people don't like it. I talked to an ISP in Texas recently, and I said, well, we were told by an investor that we could build 300 million in plant. I mean, that seems crazy to me. It seems like a big number for something that hasn't even been built yet. Like, how do you know that you're going to actually make this successful? Why not do it in small increments of 10? Why not do 10 million and see how you do? And then we can do another tranche and another tranche. But people want to go after the big shiny apple if they can, and they go after it. And so cities do the same. So, I think lessons learned in this field, going slow and like you said, building value as you go is important.
So what are some of the key metrics that you look at to determine whether or not you'll underwrite a project?
Coverage ratio. So generally in the utility finance space, we look at 1.25 as a minimum coverage ratio. When you're doing off of a pro forma, you're doing some financing off of an existing, like what we project the network to build out and generate revenues to. We want a higher coverage ratio, probably close to 1.75 to 2 times coverage. And then as you start to hit cruise control and you're in second, third gear, then, you can bring that down to 1.5 times coverage. But we really focus on the utility side. Like I mentioned before, the ratings agencies looks at telecom from a liquidity perspective. And then utility methodologies are geared towards coverage ratios and efficiency on operations and things like that. So that, so there's 2 different ideologies, right? That's why in the very beginning, the question is, do you think this is going to be utility or do you think this is going to be an ISP-driven industry in the future? Because if you're doing one path, follow that path, right? If you're thinking it's going to be utility in the future, which I know it will, just a matter of when, then you have to go and think about these metrics as far as building infrastructure from a financial perspective.
So one of the questions that came in is from the perspective of private capital, what U.S. government federal funding source do you encourage funded companies to pursue when planning to build out networks, whether fiber, wireless, or otherwise?
So it's funny, but in this field, there's at least in when I was in the tech field, there are all these acronyms and terms, and they all had specific physics meanings behind them that were based on physical properties of something, right? Dense wave multiplexing, the physics of that, right? In the financial field, in the finance, people use the word bond as a very, broad term. And to me, a bond can be anything, right? So usually what I try to do is break it into something more simple, saying this is a note, or this is a collateralized loan, or something like that. So there is also this nuance of what does private capital mean, right? Private capital mean it's coming from the capital markets, from large funds or an individual, or private capital mean that it's coming from someone who's owning infrastructures of private equity model. So I think the question is based on private capital, which means generally anything other than government capital is what you're asking, I think. And so in that regard, the problem is, like I've been saying since the very beginning here for the last 20 years, that you can wait for grants, till you're blue in the face, and most cities do. There's one in Kentucky, Warren County, right? I have a colleague of mine who worked with them 20 years ago on trying to build a fiber network. And this guy worked, Lawrence, he had worked on some of the early Google fiber work. He's out of the business now, but there's cities that have been waiting for those grants for decades. And so if you wait around for a grant, no matter where it comes from, you could be waiting for a long time. And so my approach is, if we're going to raise money to do something, we're not going to, we can lean on a grant if it's there, right? But at the end of and we can do a bridge on it. I can do a anticipation note to a grant again, but at the end of the day, if you lean on those grants, you might be waiting for a long time. I mean, even the BEAD, they say next year, we'll see. I'd be shocked if it actually came out next year and we had that money available. But grant-wise, I do a lot of work with the USDA, Lion's share of my work, other than broadband, is on the Department of Ag programs. I'm a big fan of those. They have their own issues, as they all do. But there's a handful of, if you can get grants from your states, that's going to be a little bit more localized. The more localized donations and grants you get, the better, is my opinion. Right?
Hey, let's wrap up on private activity bond financing for qualified broadband projects under the Infrastructure and Jobs Act. Have municipalities gone forward with any of those projects?
I'm sorry, for what?
Well, maybe first of all, explain a private activity bond, a PAB, and there's financing for qualified broadband projects under the Infrastructure and Job Acts. And just the question from the audience is, any municipalities, have they gone forward with those projects?
Well, I mean, I don't know what private activity bonds are currently in play, but private activity bonds is a method of raising. So let's take a step back. So from a private capital perspective, right, not using a grant or some sort of federal guarantee, the private activity bonds is a vehicle for allowing a borrower to get cheaper cost of capital through the tax exemption of the debt, meaning that the investors don't pay taxes on the investment. 85% of the investors in tax exempt are high net worth individuals. Our firm focuses on tax exempts because it brings, first of all, for a few reasons, tax exempt debt is cheaper, cost of capital is cheaper. And that's really notable now. 8 months ago, 10 months ago, before the Fed raised rate, the spreads between taxable and tax exempts were pretty thin. Now our tax exempts are lower than treasuries. They were lower than treasuries for 50, 60 years prior to 2010 and 11. Now we're back to normal again, where our tax exempts are lower than treasury rates. And that's for rated stuff, non-rated. But still, the rates on non-rated is a lot lower than taxables, which is where most people from a for-profit perspective raise their capital. You're looking at 9%. Tax exempts, we're looking at 6.5%, right? So the capital is cheaper. Not only that, you can sell off tax exempt debt in smaller increments. You don't have to do a $100 million cap raise for a for-profit taxable bond, for example, a corporate bond, right? You can do small increments, and we often do that. 5, 10 million, 15 million. The optimal range is probably around 10 to 15 million. I think if it gets lower than that, then you got to deal with cost of issuance is a little bit higher proportionate to how much debt you're raising, but you can still do it. But private activity bonds allow you to access the tax exemption on debt, and it's a good vehicle for municipalities and rural markets that want to build, maybe let's say the very first tranche of build infrastructure. Private activity can have a partner, right? You can have an ISP that's a for-profit ISP. You get a certain limit of allocation you can get for private activity bonds. So you can't build a $100 million network. You're limited based on what the project scope is, where it's located, and so forth. There's a lot of steps involved to issuing a private activity bond, but those bonds are useful for a lot of reasons. You also have, and you don't have the same restrictions that you might have on a general tax exempt debt or bond, where you have an ISP operator. So there's certain IRS regs that determine whether or not the debt is going to be tax exempt. One way to get around that for a for-profit is a private activity. The rest of the time when we're doing tax exempts, we have to structure them where the ISP falls under IRS management guidelines. Those were revised back in 2016. Obama administration revised them, which opened up a lot more flexibility on P3 structures. So there's a way to navigate it either way, either through private activity bonds or just through your traditional tax exempt method. But that's all about structure. So if you're going into a project and you want to figure out how to bring an ISP in and work with them, having a structural idea of how you're going to go about doing the debt is a good first step, right? Because if your business structure is different, you're going to be put into a certain bucket, and your operating margin as a tax exempt borrower is going to be higher because you're not paying property tax, sales, all the various taxes that the for-profits pay, you don't have to pay. So your operating margins are already impacted by about 30% just because you are a tax exempt entity. One of the advantages of being a nonprofit or a muni. So, but back to the whole private activity bonds that Mike asked. There's a lot of ways you can leverage the tax exempt market, and that's one of them. That's a vehicle we could use in partnership with a for-profit. Yeah.
Well, Chris, always a pleasure to talk to you. I look forward to seeing you in Colorado in a couple of weeks. But I really appreciate you sharing your insights on tapping the municipal markets and the work that you and your team are doing to help sure that all these communities are able to close the digital divide. So thanks everyone for joining us today for Where's the Funding, and look forward to getting back together next month for our next episode. You're not going to want to miss that. So we'll see you all in August. Thanks everyone.
All right. Thank you.